mixed picture right now. We have Hang Seng sitting with cuts of around 56 points.
Resistance at 19,498. That's a 61.8% retracement of the recent fall.
Q4 is usually where we see, dips in occupancy, and Q1 is usually good.
5 inclusions and consequent 5, exclusions from the Nifty Next 50 index.
The 60 points lower on the Nifty, 240 points lower on the sensex.
A period we're entering, which is sort of the 2003, 2004 era in terms of capital flows.
Good opening, 22% higher now on Concord Biotech.
12.9% of the total equity, to be precise, actually changed hands.
In 19 years, we have seen all cycles of markets. Right?
Not quite getting the Friday feeling today from a bull's perspective.
Primary motive for the Reserve Bank is to ensure that penalty does not become a part of the interest.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Naishna D'Souza, and joining me in just a bit will be Prashant Nair as well as Surbhi Upadhyay. Well, it played out yet again today. All through this week, we have seen us visited that 19,250 mark, 19,300 odd, and bounce off those lows. Today it happened yet again. We're 100 points off the day's low. Earlier in this week as well, we have bounced either 150 or around 100 points from the day's low. And I'll tell you what, if we can get to around that 19,430 odd mark, we'll be able to, end the week on a positive note. And that will be pretty good news, because if we end below 19,428, let me give you the exact number, then we'll be registering the 4th straight week that we're ending low. And that hasn't happened all the way since April to May 2022. Hey, Surbhi, buy the dip has played out yet again. I think thanks to Reliance Industries as well. That one's come in there, found its form, and played a blinder, helping the Nifty to recover 100 points of the day's low.
And that's not bad at all, right? That's how you want to end a Friday. We've been in a bit of a slump throughout the session today. Yeah. And actually, global cues are still pretty weak. I just want to point that out. We'll talk a lot about Reliance and what's caused this move. The headline is that you will have the Jio Financial Services listing happening on Monday itself. More on that in a bit. But quick context to keep in mind is that the global screens are still very, very weak. You've got some of the regional markets like the Hong Kong Hang Seng ending down 2%. European markets are reeling under pressure right now, down anywhere between 1% to 1.25%. There you go. That was the Hang Seng picture. And Europe has been, quite weak, at least to start things off. But there is a buy on dips playing out over here. On Reliance, let's just get back to that stock, because that's kind of turned the texture around for the index. There were two things going for the index actually this afternoon. One, the fact that banks did not cave in. Throughout the day, a lot of the global-facing sectors like commodities, metals, IT, they've been weak. But banks kind of held their own. The Nifty Bank, which has otherwise been a huge underperformer, today decided to kind of, provide some support. And now Reliance comes in to pitch in. The news on Reliance, obviously, is, as I said, that Jio Finance is going to be listing on Monday. Remember, the discovered price was above market estimates. The price was closer to 261, 262 rupees. And then we see, the stock lists, it'll get added on the indices, then it gets removed from the indices. And we'll have Prashant talk more about that as we go forward. But for the time being, that has really helped the market. In addition, just want to point out that a couple of the Adani Group stocks have had a good run today, especially the index names like Adani Enterprises and Adani Ports. And then you have HUL. Let's pull up the contribution chart. Actually, it'll talk about all the boys who have batted and have helped the Nifty recover from the funk. So yes, it is Reliance, but there are others as well. Lever and some of the other names, ITC, L&T. These have also played their part. So all in all, Prashant's joining in. Prashant, it's not a bad-looking screen at all from the Bulls' perspective now.
What is the name of the OTT series, right? What is it called? Manoj Bajpayee? You guys remember? Ek banda kafi hai. I think it just struck me. I don't watch it, but that kind of, I think, it tells you exactly what's going on. It's just one name, right? That's all that it has taken for the market to come back in the way things have come back. So just absolutely stunning. It was looking so different even 15-20 minutes back before the news on Reliance hit the screen. And since then, it's a complete reversal, so as to speak. But more on Reliance in a bit in terms of what this new entity, which is going to start trading, will mean for the market is interesting. I mean, the way this price discovery happened this time around, and of course, then now the listing, which will happen on Monday. By the way, there is, of course, there is listing on Monday of Jio Financial, and then a week later, there is the AGM, the Reliance Industries AGM, which I think is also, equally important, if not even more important, because event in the Reliance calendar, because you'll get to hear about what the promoters plan to do for various businesses, and because this is the newest listed entity, I think there'll be increased focus and kind of attention paid to that there as well.
Prashant, the way they've kind of started on the front foot, I mean, we all know they've already tied up with BlackRock. I mean, the asset management circles are abuzz with what lies ahead, and that's even before we have the listed entities start trading on the exchanges. So big plans.
Oh, absolutely. Should not expect anything lesser. Well, how should you position yourself in the last hour of trade? That's the question. Mitesh is with us to tell us exactly that. Mitesh, hi. Good afternoon. It's like Kaya Palat from first half to the last hour as we start. Would you bet on this to stay, prices to hold, and then a decent kind of sort of recovery from here on, or you think, well, it's still very tentative?
Well, I think now there's a stronger chance than what we've had in the last 2-3 days of seeing a temporary low. But while we still didn't test the levels of 19,200, we got to as close as 19,250, and that is where we indicated to take some long positions. My sense is that maybe, if there's one more dip, I still believe that 19,200 will hold. Keeping that kind of an idea in mind, I think it may not be a bad choice to explore more of, long positions and see if it can play out nicely. On the index, people can start buying call options of the current expiry disclaimer. We have some 19,300 strike calls. And if we get closer to 19,250, 260 again, take a 60-70 point stop loss and buy into futures. So that's the way we'll approach it. And therefore, clearly shorting in the short term, and these are all, 2-3 days kind of a outlook which I'm sharing on an immediate basis. Shorting may not be a good idea. And I think, positions on the short side, I would suggest to take profits. Coming to individual stocks, SBI Life can be bought with the day's low as the stop, 1266 is the low, so 1265 as the stop loss, and look for a target of around 1310, 1320. And Reliance you could have missed, I think Surbi was also highlighting that. I want to buy the stock, but there's an intraday pivot at 2580. So, I would want to buy about 2585 with the stop below 2565 for targets of 2630.
Oh, okay, all right. Thanks a lot for that, Mitesh. We'll keep coming back to you as the show goes on. For the time being, let's focus on a couple of those new kids on the block. Concord Biotech, well as Bussy and Trade, the stock debuted with a 20% premium on exchanges. Ekta is with us to fill us in with more details on that. Ekta?
Thanks for that. Well, it is interesting because it's an RG-backed API company. It was subscribed around 24.8 times, retail 3.78 times, but good QIB subscription at around 67 odd times, non-institutional buyers at around 17 times. They raised around 465 crores from 41 anchor investors at the higher end of the price band, which was 741 rupees. The company, however, has raised funds only through purely an OFS of around 2.09 crores, with Helix Investments getting an exit through this OFS. Now, the promoters will be holding 29.4% post the IPO. It is an Ahmedabad-based API and formulation manufacturer. They get 89% of sales from APIs, 11% of sales from formulations, 50% of sales from India, and the remaining from exports. Now, in terms of the key USP, they have over 20% market share by volume in 2022 across certain fermentation-based APIs. Now, as of FY23, the company had 6 fermentation-based immunosuppressant APIs. So it is a niche space that they basically operate in. Now, the company, in terms of growth drivers, is that they have this niche complex portfolio. It's a high margin business. They are looking to expand into complex generics such as injectables. They do have a good financial performance which they've delivered for FY23. Revenue growth 20%, margins 40%, profit growth of around 37% on a year-on-year basis. Negatives is the China +1 factors not playing out as per, considering that there is some amount of competitiveness which is coming back from China, and high cost inventory for many companies still needing to be liquidated. But overall, it's a good listing considering that they do operate in a niche and complex space.
Okay, all right. Thanks a lot for that, Ekta. Well, let's get in a comment then on this one. Market expert Hemang Jani joins us on the show. Hi, Hemang. Good afternoon. Good to see you in. What's your view on this new kid on the block? I mean, it's had a pretty good run just in the first few hours.
Good afternoon, Nigel. Thanks for having me. I think we've seen some recovery in the pharma space of late. The data points coming out on the both the generic pricing as well as the API segment are showing some positive traction, and clearly there is some interest which is there for this kind of companies. So I think from a mid-cap pharma perspective, I think it would be a good company to have a small exposure on.
Okay, that's Concord Biotech. Let's look at some more stocks that are buzzing around today. The mid-cap market, at least at the index level, it's not outperformed by a huge margin. The advanced decline ratio is actually negative. I mean, unlike yesterday when the lines were more or less even, Steven, look at the advanced declines right now. You have about 1,700 declining stocks, and that's the mid-cap index. It's off the lows, but still flat. Nonetheless, some interesting stocks for sure. Of course, the Adani Group has been buzzing around. You have some of the consumer names. Lemon Tree has done very well. Campus Activewear is up about 5-6%. So these are some of the names on the upside. South Indian Bank obviously is on news because they have a new MD, and he's not just someone with an IIM badge. He's also someone who's worked with Citigroup for a long time, for many years. So maybe the market kind of likes the sound of that. So several stocks that are in the news. The other one is GMM Pfaudler. We'll try and get in our colleague Vivek on that in just a bit as well. GMM saw a very large block trade happen. About 13% of the equity moved around. The stock has recovered very well, and there's a reason behind that. It seems like a lot of overhang is over and done for this stock, with this large investor pretty much emptying out. Let's get some of these stocks in. Hemang, I just wanted to get your thoughts on PSU banks, because in general, PSU banks have done better than the private sector, the larger private sector names, where there's been, I think, maybe technical factors like FII selling, etc. But how would you approach banks now, and which ones make it to your buying list?
When we look at the PSU banks, clearly the operating performance for some of the smaller banks was better than some of the larger banks like SBI, and versus even private sector banks. These smaller PSU banks delivered better numbers. There was a little bit of pressure on the NIMs, but I think the kind of weakness that we have seen in certain pockets like SBI, which has underperformed, I think it seems to be getting over. The stock is stabilizing around these levels, so I think it presents a good opportunity. And also the smaller PSU banks, be it PNB or Bank of India, Union Bank, I think these are the banks where you can see some good stability, because there is not too much of a pressure in terms of NIMs, and overall credit growth continues to be very strong. So I think it would be better to focus on the smaller PSU banks at this point.
Okay, got that. Stay on, Hemang. Let's now revisit that move on GMM Pfaudler and why it's so interesting. As we just showed you on the screens, the stock has actually recovered. It was down 5% when the blocks actually happened in the morning, and now it's actually positive. And Pfaudler has actually sold a little over 13% stake in these block deals. Vivek is joining in. Vivek, I think this is something that the market wanted clarity on for many months, about what this global entity plans to do, if it sells, who will be the buyer, etc. So tell us what we know right now.
Well, absolutely right. Even after the block deal, we did highlight that the only entity that had such a significant stake, apart from the promoters, was Pfaudler themselves. Remember, around May 2022, Pfaudler held over a 34% stake in the company, and post which, there was a significant change as far as management control was concerned. GMM itself went ahead and bought the global parent arm. Post which Pfaudler said that they would be paring down their stake, eventually bringing their stake in the Indian listed entity, that is GMM Pfaudler, to zero. In December 2022, what actually happened was they sold over 17% stake in the company, and the remainder 14% that they hold, 14.6%, was seen as an overhang as far as the stock of GMM Pfaudler was concerned. Today morning, we had a very large block deal. Almost 13% of equity changed hands, and post which the management has gone ahead and given a detailed press release to the exchanges. Pfaudler themselves, like you mentioned, has been the seller in this particular stake. But very interestingly, almost 10%, 9.9% has been picked up by a very large private equity firm, Chris Capital, and that will give some amount of confidence. Along with that, the remainder 3.7% equity of the company has been purchased by other investors. So now Fodler still has close to 1% stake in the company post today's block deal, and there is also clarity emerging on that front. The Patel family has said that they will buy the remainder 1% stake as well, and this particular stake would be bought at 1,700 rupees a share, which is a significant premium even to the current market price. So all of this has lent credibility and has given significant amount of recovery from the intraday low.
Okay, well, thanks very much, Vivek, for that. I think there are a few brokers. Axis, I think, has coverage in the mid-cap universe. But they were watching this as one of the key things as an overhang. I think they got a price target of 20 to 2,300 rupees and 50% upside. That's their view, of course. Hemang is still with us. Hemang, any thoughts? Do you track it? If yes, your thoughts on JMM?
So Prashant, as Vivek pointed out, that with this about 14% kind of a sell, Fodler will continue to hold about 20%, and they were anyway looking to exit. What remains to be seen here is who has emerged as the buyer, who has picked up almost about 14% kind of a stake. The company fundamentally has been doing well. The sector is doing well. So I think if Fodler is on the way out and there is a clarity about what exactly will happen to the remaining 20% stake, there is a case for some sort of a re-rating in this company.
Okay, Hemang, got that. That is JMM Fodler making it to the headlines. By the way, Nifty is again slipping a little bit. It's just about 16 to 17 points lower. So we have our eye on the screen. Let's take that break. We'll come back and we will also be chatting with N. Jaykumar of Prime Securities in a bit, and of course go back and revisit that story on the Geo Finance listing that happens on Monday. Welcome back. The indices are still flat, but we're looking out for interesting stock stories that have made it to the headlines today. And Yatharth Hospital is definitely one of them. It's a new listing, and the company is reported would look like a good number for the first quarter. In fact, the stock has been up right from the morning, 9.5% higher. So first, let's go across to Ekta and understand what these numbers are all about. Looking good in Q1, Ekta?
Well, yes, a maiden quarter for Yatharth, and it has been a good quarter for them. Revenue up 39% on a year-on-year basis. EBITDA is coming at around 41.4 crores, which is equal to margins of 26.8%. It's improved close to 400 basis points on a year-on-year basis, and profit of close to around 20-odd crores. Margins have been stable on a Q-on-Q basis as well. What stood out to me is that their occupancies have increased at a time when it is generally a seasonally weak quarter for hospitals because of summer holidays, etc. So occupancies have risen to 51% versus 49% Q-on-Q and versus 40% on a year-on-year basis. Their average revenue per occupied bed has also seen an increase both year-on-year as well as Q-on-Q. In terms of the guidance from the company going forward, they have indicated that they would look at occupancies of around 60-odd% possibly, and that would increase the overall profile of the company as well. Now, talking about the margins, they are confident of a margin range of around 26 to 27%. They would be looking at acquisitions in terms of expansion. So that would be another trigger to watch out for this particular hospital company.
As far as occupancy is concerned, we saw a good jump in that. That is mainly due to reasons that are not Extension Hospital, and as well as the new acquisition that we did in Jhansi Orchha. They really ramped up their occupancy. So I am pretty sure that in the coming quarters as well, the occupancy should be reaching around 60% mark as well. Because our occupancies are increasing, in our hospitals, so that is leading to organic growth and leading to good margins. Few years back when COVID was there, margins tend to be higher, due to mass volume of the patients. But post-COVID, we did see, a few dips of margins decrease. But now I think margins are back on track. And I think 26 to 27% is where we see the long-term EBITDA margins to be roughly here from.
Well, in fact, we also spoke to our market master, Shiv Puri of TVF Capital Advisors. He's also optimistic on the healthcare space. Let's hear him out.
What we're starting to see is post-COVID, people are taking their health a lot more seriously. You're seeing life insurance patients, which used to be a very small proportion of our hospitals' incoming patient list is now rising quite dramatically. And look, healthcare in India at the top private healthcare in India is still reasonably cheap compared to anywhere else, even in the emerging world.
Well, Hemang Jani is still with us. Hemang, earlier this week we had a couple of large names come in there and buy some of these. GQG is betting big on the likes of JSW Energy, Adani Power as well. What's your take on JSW Energy? They have given the clear roadmap that for EBITDA by 2030 will go up multifold. Even the PAT number will move up. How do you approach the stock? I'll tell you why. In this month itself, the stock is up close to 25% and it's recovered a goodish bit from the day's low. Your take?
So typically, Nigel, when you see big investor like GQG coming in, historically, these stocks have seen a good amount of, action, and that would surely have some sort of, impact on the company. Apart from that, if you look at the financial performance of the company this quarter, they've reported a very decent about 24% kind of a growth. And the overall outlook also is quite positive. So I think people are looking out for, companies where the overall growth potential is very high. And when you have a very, prominent investor coming in. So I think from that perspective, this is looking quite positive.
Okay. All right. Got that. Hemang, just stay on. We'll have some more questions for you in a bit. I think we do have N. Jaykumar now joining us. Yeah, I think we can go across to him. Jakes, hi, good afternoon. Always a pleasure having you on the show. Thanks for joining in. So it's been interesting for the market because we've kind of gotten trapped into this range. And I think a lot of people are trying to figure, because this whole global narrative has also turned fairly somber. Everyone's talking about perhaps, stickier inflation, higher rates, China and its issues. So I think the question that everyone's trying to grapple with is whether there's more downside that's opening up, or whether we're pretty much going to be in a range where we're probably at the lows now.
I think markets may, in the very, very short term, be a bit oversold and there could be a bounce. I feel this is part of an overall range of, say, maybe around 18.6, 18.7 on the low to 20,200 on the high. That's the kind of broad range. But in that range, I think 19,250, 19,300 may well have been a short-term bottom created. I'm not from a perspective of trading calls or otherwise, but I think the markets may be a bit oversold because, in a sort of a very short period of time, a number of dark clouds have sort of come over the market, especially with the kind of reasons that you mentioned. Having said that, I'm also seeing a lot of protection being built up. FI positions have also turned quite sharply, lighter on the long side. In fact, they've become net short to quite an extent. I'm seeing this this play out even in terms of futures premiums being almost non-existent vis-a-vis stock prices. So given all that, I think in the short run, the markets are positioned with protection built in. And to that extent, I feel the downside may be limited. But there's no taking away the fact that we could be in this range for some length of time for most spaces, barring maybe one or two sectors, which is the endeavor that all of us have, that in markets like this, can we identify a sector that's strong, that holds out, and therefore can lead the next rally, if you will.
Hi, Jakes. Good afternoon. Jakes, I want to ask you about the steel space. You've made this point numerous times that India, is going to do well and the steel sector is going to really perform from here on. Now, the only problem, I think, is that China has become a bit of an issue. In case they export more, that's what could hit prices. Yes, I get the point that input costs have cooled off as well. But would you be a buyer, given the kind of balance sheets we have, given the kind of product profile that's coming out, as well as the expansions that we're seeing taking place across the 3-4 major names?
Well, China has been a problem, and not a bit of it, been a big problem for the last, now almost 18 months to 2 years. Prices have cooled off from, in rupee terms, from 85, 90,000 down to 57, 58,000. And interestingly, the fact that China is a problem, that metals are cyclical, the fact that prices have come down, all this is well known. Despite that, we have results which are showing margins which are higher and more sustainable than when prices were at 85 to 90,000. And I think therein lies the rub. Because when prices go up and you make profits because the end product prices go up, everybody from the government, inflation watchers, inflation hawks, all of them come down heavily on you. And they put in all kinds of measures to bring down prices. At 57, 58,000 equivalent steel prices per ton, there is nobody who's interested in worrying about, end consumer, etc., because he's getting a great deal. The problem here is that what is optically being seen by everybody, the big sort of elephant that's being missed is that margins have turned significantly better for the well-integrated ones. Some of the biggest names have announced results recently, including companies that have shown reduction in debt, near zero debt in one or two cases, and margins are up for the efficient ones to almost 14,500 per ton. So I think if this scenario were to play out, where prices remain depressed but margins are better, I think any manufacturer will tell you that's the scenario he'd take with both hands every day of the week.
Okay, Jakes, just stay on. I want to, get Prashant into the conversation as well. He's actually walked over to the big wall to talk about really what has been the story of the hour. That's caused a stir on the Reliance stock as well. Jio Financial Services will be listing on the 21st of August. Prashant, take it away, in terms of what we can expect and how this will play out.
Well, so, the stock makes its debut and lists on Monday, that is the 21st. Remember, the price discovery for Jio Financial Services happened, around a month ago, a little more than that. The price which was found for Jio Financial Services in that session was 261 rupees and 85 paise per share. So when it starts trading on Monday, this basically will be the floor. in the sense that, it'll be calculated on the basis of this particular price. That's point number one. So it's like a regular price discovery like it happens for a new listing, for a new IPO. At 10 o'clock, it'll start trading on the exchanges. Just a quick check on numbers, right? I mean, this is something we put out earlier as well. This is the equity capital. That is the discovered price. The implied market cap for Jio Financial is about 1.66 lakh odd crores or so. Of course, once it gets to the market, we'll find out what the market wants to ascribe in terms of a value one way or the other. What happens after Monday? What happens after listing? Stock will be removed from all the indices. Remember, Jio Financial all this while has been the 51st stock on both the 51st stock on the Nifty and 31st stock on the Sensex 30. But it's been quoting at a constant value of that 261.5. It's not been trading. But starting Monday, it will be trading, right? Jio Financial will be trading. So listing on Monday, and the third day, which is Wednesday evening, it will be removed from the indices. This on the condition that for 2 days, it does not hit any circuits. I mean, the stock does not hit any circuits. If it is, then you go into another 3-day cycle. But once it is removed, it can then make it back into indices depending on the sort of index eligibility criteria. It's a market cap, liquidity, etc., etc. We just had the half-yearly review, earlier this week. The next actual review will only, I think, happen early next year. But it could happen earlier as well if some stock goes out, etc. So we'll see. The other thing is, this is, again, I mean, just a quick look at what the sum of the parts value for Jio Financial works out to. Something that I put out earlier, but I updated because a bulk of Reliance Jio Financial Services value comes from the 6.1% treasury shares it holds in Reliance Industries. So the value, including that 6.1% plus the core net worth, which is the amount of money Reliance has put into Jio Financial Services, minus the cost of that 6.1%. So you add that to the 6.1% stake, taking a 3 times multiple. It works out to 1,37,000 crores. I mean, let's go to the next graphic. It'll tell you that the sum of the parts total works out to 1.37 lakh crores or so. So this is, the short point in terms of how things will pan out. Remember, the listing is this Monday, 21st, and then on the 28th is the Reliance Industries AGM, which is a very important event in the RIL calendar, where, of course, we will wait to hear in terms of Reliance's plans for most businesses, but in particular for the newest entrant into the stock market, which is Jio Financial Services. So that's the listing. Jakes is still with us. Jakes, any thoughts? What this means? Actually, first a quick word on Jio Financial Services. You'll be able to buy and sell the stock on Monday, and then what it means for Reliance, really, from here.
Well, I'm not, I think we need to recognize that there's probably the biggest player in the space who's just walked in. So I think it's a lot more exciting, not from a stock market perspective necessarily, or not the stock market perspective alone, but to actually look at what kind of disruption this could do in terms of businesses. Not sure of pricing as much, but in terms of, to get credit across to a larger cross-section of India. That's, to me, actually the bigger question to be asked, and the bigger thing to be observed is how disruptive can this become? I know it's been around, but I think this is the first sort of, first flush of public interaction, if you will, that it'll have. So I'm kind of keen to see that part of it more than just a play on the stock market. And certainly, I don't think it has that much to do with the Reliance stock itself.
Okay, so that's a word on Jio Financial. Promises to be an interesting week, the coming one, with that listing happening. Jakes, another trend, and we've asked you this, I think, in June when it was happening. I'm going to ask you again. And this is this trend of huge block trades that are happening, right? We saw a big one with Pfaudler just today. Pfaudler sold out, and Chris Cap has come in. So it's a very interesting buy and sell happening. Domestic institutions are buying, mutual funds are buying. What does all of this tell us? Is it a good indicator that we are getting deeper in terms of market depth, participation, etc.? Or does it make you a little worried? Because a lot of the people who are selling out are either promoters or the early investors.
Well, it just tells you that everybody wants to take some chips off the table. So caution large investors seeking returns, especially given that many of these could be linked also to the new age companies where blocks have been traded, indicates to me that given portfolios have taken a huge beating, I mean, this is the paradox, right? That people kept focusing on the new age economy companies taking off and valuations that they were attaining. And now you have a situation where funding to the same companies is becoming a huge challenge. The secondary market has taken off, but many of these stocks are being now dumped because the overall portfolio of the VC community, if you will, has taken a big beating. I mean, look at the write-downs that some of the top three names have taken. I think they aggregate over 2 years to almost $70–80 billion. So given that, I think they're also rationalizing, they're also generating liquidity by getting out wherever they can. So I think this is a good trend. The fact that Indian markets have been able to absorb this is actually even more heartening. But in addition to this, there are existing companies where, whether it's the Indigo, the Gangwal family offloading or any number of such cases where promoters and their associates are doing it. I think it's a cause for some concern that maybe a lot of this is going to retail hands. Or the silver lining that some of us have been looking at is the amount of retail money coming in and more retail commitment. That wall of money, we've never been able to envisage or estimate correctly. And to my mind, that's the big wall of money that's quietly sort of absorbing this. It doesn't come in terms of large numbers, but is there almost a daily basis, monthly basis through SIPs, etc. And I think it's that wall of money that we have underestimated as to how powerful retail savings can be in terms of acting as not just a buffer, but capital providers to enterprises.
Okay, by the way, I just want to point out that the market is witnessing some pressure once again. When we started the show, it looked like a great recovery, but there's selling coming in on the bounces, and that describes a slightly different texture of the market. Look at the selling. From the top, we've lost good 30-35 odd points. In terms of weakness, it's the same names. I mean, it's the same TCS, Infosys on the IT side, and a couple of the commodity names, Coal India, Hindalco, most of your commodity and metal stocks, ONGC, BPCL, they have largely been weak. That's how it has played out. Jakes, finally, any new interesting themes or trends that you would look out for, maybe once the market cools off? Today, Prashant was having a very interesting discussion on, battery storage solutions, this pump storage hydro sectors, right? I mean, basically the market's looking for new ideas where maybe technology or maybe you can have, something that causes a re-rating or a new discovery. Defense has had that. We've seen that play out on the EV bus stock, so to speak. Anything where we should be looking?
You might have a few logistics-related plays being in focus. I think that's going to be the other one that people are talking about, what I hear. The one big theme which has come, which is set in where funds are slowly positioning themselves, but I think not enough capital has come in, I feel is the pharma space. And the fact that pharma is led by consumption or demand in the US, then to the developed markets, Europe, etc., indicates to me that that space could have multiple quarters of growth ahead of them. Pricing pressures are lower. We have talked about for the first time shortages in various markets. We're talking about facilities getting shut down and short-term problems on supply being created. But all in all, I think a combination of better compliance by Indian companies from an export perspective, that's the FDA compliance, faster approvals, and a lot more in terms of the complex generics, the specialities, and probably higher margin products which Indian companies are getting into compared to what they were. I think all of this means that with most balance sheets actually being very close to zero debt or net cash positive, I think you're talking about a scenario where the next few, maybe 4 or 5 quarters could belong to pharma. And yet, as I speak to you, the exposure levels that people have taken are abysmally low. And pharma could be a big sectoral play where money will be forced to come.
Okay, all right. Jake, thanks so much for stopping by and filling us in with your thoughts on the markets. Wishing you a good rest of the day and a good Friday as well. Well, let's move on. Let's take a short break. When we come back, as always, we'll get our technical experts with us. They'll join us for some buy and sell calls. And we'll also continue our focus on the markets. Don't go anywhere.
Augmented intelligence can expand the boundaries of human creativity across industries. But true disruptions occur when human intelligence meets the power of technology to create ideas that shake up the world. Meet the disruptors who are steering innovation and reshaping brands and businesses. Storyboard 18 Young Guns, this August in Mumbai.
Well, just when you thought you had a good recovery, we moved into the green as well. But suddenly a couple of the stocks have slipped. Mahindra & Mahindra has moved to the low point of the day. And that's what's making the Nifty retreat after, it was trying to make its way to around 19,400 approximately. So Mahindra & Mahindra has moved lower. Apollo Hospitals as well has taken a bit of a downtick. And Dr. Reddy's, that's moved low. But I think it has to be a larger stock that's done a bit of a U-turn. And L&T is one such stock that slipped from the top. And that's what's putting some pressure on the Nifty as well. Dr. Reddy's moves lower, but L&T, that's the meteor name among all these. Just take a look at that. Downtick is what we're seeing out there. Mitesh Thakkar is back with us. Mitesh, it appears the pullback wasn't the real deal. How are you reading it? And give us your trades as well.
Come off a bit even. That's why I said there could be one possible test of 49, 250, 200 zone again, because the indicators are just in the process of bottoming out and it's not yet, the setup is not yet fully complete. But as I said, I think there's a chance of this happening. So I would believe that 19,200 will hold. And therefore now I think, any declines closer to about 19,250, 260 would be an aggressive buying zone for me with a stop of about 19,180 or thereabouts. Having said that, on the stock side, I have a BTST on Balakrishna Industries. Keep a stop at about 23.65. We'll look for targets of around 24.10, 24.15 on the upside. And one STBT on Balrampur Chini with a stop at 389 for targets of 378.
Okay, all right, got that. Thank you very much, Mitesh, for the trades today. You have a good weekend and we'll see you again on Monday. Well, as we've been telling you, markets have been a little wobbly. In fact, the Nifty right now is tracking a 50-point decline all over again. We're still not anywhere close to the lows of the session. That was, further below, almost 75 points lower than where we are right now. But the decline is back on, and that's because, in any case, global markets have been fairly weak. We've been making that point. And the market has seen, of course, a lot of action on the global front as well. A lot of global headlines coming in, which are making traders fairly cautious. Prashant is now standing by with some more details on the way the setup is looking like and the big drivers ahead for the market. Prashant.
So much has changed, right, in terms of the themes which are driving the market. I'm talking not just about the local market here, but I'm talking about global themes. A month and a half back, stocks were ripping higher because there was going to be a soft landing. And now there is a reassessment that maybe we will once again see inflation re-accelerating. So we will get a reflation, no soft landing, no landing. And what does that mean? It should mean good things, right? But as they say, too much of a good thing is sometimes not good. It's actually bad. And that's essentially what I'm trying to put out here. Just take a look at a couple of things, right? First is a measure of US economic data surprises, which is an index. How much is data, US high-frequency data, surprising on the upside as compared to consensus? That index is at the highest since 2021, which means that data is coming in strong and stronger in the US. As a result of which, you've got the 10-year in the US, which is now approaching the 4.34 odd mark. That's, current cycle highs. And that is essentially being driven by bets which are rising that the Fed may actually need to do more. What we call neutral rate. What is the neutral rate, right? If you remember last year at Jackson Hole, all the entire talk was, let's get to at least the neutral rate. Now, I guess, and Jackson Hole is around the corner once again, the conversation is going to be, where is the neutral rate? One thought, neutral was where the market got to, but perhaps not enough. Because yields are up, government bond returns are now negative in 2023. That's quite something. Just last month, for the year, government bonds were up. These are, a broad benchmark of bonds, global bonds. It was up 3%. So bond prices are falling, and you've got yields which are actually, obviously, rising. Gold is another commodity which is largely seen as, a bit of a safe haven kind of asset, but look at that. It's down 8 out of the last 10 sessions or so. And of course, steam is being let out of stocks globally as well. Because this started, the market which is down the most is the US. I mean, the NASDAQ is down almost 6.5%, 7% year to date. What was leading the market higher was all these AI stocks, and we've spoken about this earlier, quite NVIDIA and stuff like that. This is the part which got kind of deflated a little bit earlier. But this has stopped now. They're not falling anymore. Another whole bunch of cyclicals is what is in the US leading the downside. And along with it, real yields are also rising. Not nominal yields, but real yields themselves are rising, which is hurting tech. And not just, any and all tech, but unprofitable tech. Long duration tech, which is basically where profits will be made at some point into the future. So a lot going on. Amidst all of this, right, you got another large part of the global economy which is pulling in the opposite direction. And this is making things even more complicated. I'm talking about China. I mean, China is sort of soft or no landing in the US, and it looks like a hard landing in China. Confidence absolutely rocked there, and outflows out of the equity markets, etc., continuing. Look, you only have to look at the currency there to see what's been happening. So this is the broader kind of global setup that we find ourselves in. I just want to wrap up with how various things or asset classes have done this year. I didn't expect to see Bitcoin there, but it's up 60% this year. Stocks, global stocks are up 11.5%. Nifty is up, by the way, some 6.5%. Gold is up 3.6%. Dollar index has come up, but actually YTD it's flat. Oil, you got government bonds, as I said, which are in the negative now, and commodities are down about 8% or so. I want to just wrap up by saying that the two markets which have been the strongest in the world, not just this year, you will go back and look at last year or 2021, have been the US and of course, India as well. So it's a stronger markets, and stronger markets usually, for good fundamental reason, also pull back the fastest more often than not. So keep an eye. But I thought useful to kind of lay the chips on the table in terms of what's really the dominating drivers for the market right now. Back to you.
Okay, all right, Prashant, very, very interesting and great perspective there. Important to keep things in mind, the way a lot of these wheels are turning right now simultaneously, especially those rising yields in the US. Well, let's come back here at home. Still down 55 points on the Nifty. The Bank Nifty is still flat. Mid-cap index is now cooling off. It's down about 80 points as well. And we've already pointed that out, that today is a very negative day for the advanced decline ratio. So the broader market isn't feeling that well. But then it is Friday, so I do want to bring up one stock that's pretty much the weekend flavor and is doing quite well, and that is Lemon Tree Hotels. And as we pick up the Lemon Tree chart, let me also introduce our next guest on the show. We have Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, joining in. Sudeep, thanks for joining in. It is a Friday, so, I don't want to sound all dull. And hotel stocks, they've had a fantastic rally, a great run, right? Starting from Indian Hotels and even Lemon Tree for that matter. Your thoughts on how you would approach these stocks now and whether you would still like something like a Lemon Tree?
If I have to look at this entire space where, the revenge consumption post-COVID came back, I think this is one space where I have been confident for a very long time, and I maintain my view. Between the airlines and hotels, I will pick up hotels. Airlines, though Indigo is doing great and they're going great guns, but the fact remains that inherently that business is volatile. So I will probably not recommend an Indigo, but I like to buy an Indian Hotels, Lemon Tree, and also Chalet Hotels. The hotels are fundamentally a strong, solid business. There is cyclicity, but the way things are positioned now, I think they are in for a good medium to long-term growth. So you pick up a good hotel company, whether it's as I said, Indian Hotel, Lemon Tree, or East India Hotel, or even Chalet Hotels. I think you take 1 year plus time horizon, they should give you good returns. The way the tourism sector is moving, the way the travel industry is back, I think hotels are bound to do well.
Nigel, we discussed Yatharth, which is up. Aster is up. So I thought between hospital stocks and hotel stocks, it's Friday. I want to talk hotels with our guests. So good to get some views on that part of the market as well.
All right, let's move on then. Mid-caps, well, they have seen a strong rally in 2023, and a Goldman Sachs note explains that foreign investors have developed a liking for Indian mid-cap stocks, especially those in the consumer durables, autos, and the realty space. Hormuz is standing by at the wall with the details of that report. Hormuz.
Well, it's taken 5 years, but foreign investors are finally starting to warm up to India's mid-cap stocks. And a Goldman Sachs note mentions that foreign ownership of Indian stocks has increased by 175 basis points so far this year. And that after Indian equities have seen foreign inflows worth nearly $14 billion in the April to June quarter after some intense selling pressure through most of last year. Now, among sectors where foreign investors have increased their stake include consumer durables, autos and components, real estate, and they have also increased their stake in insurance, industrials and cement. Now, in sectors where ownership has seen a reduction includes NBFCs, IT and metals. However, one must keep in mind that the NBFC decline is led by HDFC before its merger with HDFC Bank. Now, among the top 5 foreign-owned stocks at the end of the June quarter included Max Healthcare, Shriram Finance, Axis Bank, Sona BLW and others. Now, new age names like Paytm, PB Fintech, Delivery and 3 Adani Group stocks, Enterprises, Ports and Green Energy are also part of this list. Now, interestingly, Sona BLW has seen the highest increase in foreign ownership in 2023 in a list that also includes the like of Paytm and Delivery. On the flip side, domestic institutional ownership of BSE 200 names has declined by 10 basis points in the June quarter, yet it still remains at a historical high of around 8.9%. Now, domestic institutions have reduced stake in most sectors where FIIs have raised stake, like durables, real estate, industrials, and banks. Now, they have increased their stake in NBFCs, utilities, and chemical names. Now, coming down to normal retail investors like you and I, retail ownership of Indian equities now has increased for 2 quarters in a row. And however, the small cap ownership remains below the 3-year average of 16%. Now, here's the interesting part. The 5 most retail-owned stocks does not include a single Nifty 50 constituent. That list is led by Yes Bank, followed by Federal Bank, Z Entertainment, Voltas, and Biocon. In fact, Z Entertainment has seen the biggest increase in retail ownership as well in 2023. So to sum up, foreign investors have once again taken a liking to the broader markets, and that possibly explains the rally we have seen in the mid-cap names so far.
Okay, all right, Hormaz, thanks very much for that. Very interesting data and interesting analysis over there. We'll take a quick break on that note. More market talk in just a bit.
Welcome back. Well, the markets actually were moving towards the lower end of the range. Actually, we'll be lucky not to end at the low point of the day, because when we started off the show, we are almost moved into the green. We've corrected close to around 75 points actually in just these last 45 points or thereabouts. Mahindra & Mahindra, that's a stock that's getting a hard knock, and it's been one of the big outperformers actually. Sudeep Bandyopadhyay is with us as well. Sudeep, what do you make of this one? Mahindra & Mahindra, the big re-rating event, their focus on capital allocation. Suddenly they did that, quick buy into RBL Bank. They try to justify it, and they reassured the market that they're not going to go ahead and take a bigger chunk. But otherwise, the stock has re-rated quite a bit as well. At 1,500 rupees, would you give it a pass, or would you look to get in maybe a little lower levels?
Well, Nigel, Mahindra has been our favorite stock for quite some time. We've been recommending to the investors for the last 1 year. And it has rewarded the investors. You're absolutely right. The decision regarding buying stake in RBL, they did give a lot of explanation, but it actually still doesn't, add up. You don't spend, say, 400 crore to learn banking or understand banking and all that. And that also not having any say, not having any vote seat. So it doesn't, sit right. and particularly in the context of the fact that they had categorically mentioned their capital allocation will be sharper. They have got out of all their unrelated diversification, exited foreign subsidiaries. So I think everything has been going right, except this, unexplicable RBL stake purchase. Even the EV strategy, I think they are trying to get it right. The Temasek participation also adds muscle to that entire EV, SBU. So overall, we do like. We have that question mark on RBL, but I think if somebody is a long-term investor, they have 1 year plus time horizon. Mahindra can be bought at current level. It has corrected slightly, and this may be an opportunity to pick it up.
Okay, well, opportunity to pick it up. That's the view coming in. 65 points lower. So, it's been a bit of a yo-yo up and down from the last time that we looked at the index, really. Any thoughts on, Sudeep, any of these Adani Group stocks? Big day today. I mean, Adani Power is up 6, Transmission 6, Green is up 7%, and a few others as well. But these are the 3 big volume-led gainers. Do you own any, or would you like to own any?
Well, I definitely have been recommending Adani Port and SEC and Ambuja. I have not recommended any of these exciting stocks where there is excitement today, Adani Green or Adani Power. But as far as Adani Ports is concerned, I think it's definitely a good buy even at current levels. There has been a lot of investments coming into the company. It's a great company. I think the infrastructure created on both sides of India, eastern seacoast as well as western seacoast by Adani, either directly or through acquisition, is amazing. I think this is a company which will definitely reward its shareholder. I don't want to delve into the corporate governance and other issues and all that. Irrespective of all that, I think it's a very strong company and will deliver results.
Okay, all right, Sudeep, we will leave it on that note for today. Thank you very much for joining in. Always good having you on the show. Have a great weekend, and we will look forward to connecting again soon. So as we start our countdown for the close, it's not all that bad because the market is going to be ending around that 19,300 handle off the day's lows, at least 50 points off the day's low, and just exactly at the 50 DMA for the Nifty. So that's also another interesting point. But yes, there was a sell from the top, and that is something that can't be ignored. So that is a little bit of negativity. I'll just quickly talk about the stocks which were weak. So commodities and IT, those have been the weakest sort of links in terms of today's trading action. Coal India is ending down 2.5%. Hindalco is down 2%. BPCL, ONGC, your entire commodities universe, whether it's metals or oil and gas or materials like coal. Then you've got IT, TCS down 2%, Infosys down about 1.5%, Wipro lower. Then there's Hero Moto. Beyond these two sectors, there's Hero Moto, which is down about 2.5%. Bajaj Finance, Bajaj Auto, Titan, some of the other weak names. Actually, it's a long list of losers out there. Adani stocks were positive throughout. There's no taking away from that. Adani Enterprises and Ports, and some green on Maruti and Eicher. So, Nigel, very mixed trends when it comes to autos. You've got Hero Moto on the way down and some of these others which found some green.
Indeed. Let's talk about the green then. Concord Biotech, well, that listed today up close to around 27% in trade. Smaller stock, Mukta Arts, we don't talk about very often, but it's coming up as one of the top buzzers today, so that was up more than 10%. Gabriel India was up another 10% in today's trading session. That stock's been doing quite well. BEML Land, well, that stock was up close to around 10%. SP Apparels as well was higher in today's trading session. And we also had Welspun Enterprises. Well, that one was up close to around 9%. Add to the list, Krishna Diagnostics as well. The short point is, though the markets are ending lower with a cut of close to around 80 points odd, well, there are plenty of stocks that were up more than 10 to around 15% from the broader markets.
Oh, yeah, absolutely. No dearth of them, Nigel. And that's been the story, right, for the last... on down days as well, and we've had a few of those down days. So can't take away from that fact. Market breadth, though, some 400 stocks more on the downside as compared to stocks which ended. So 1,000 stocks are higher and about 1,400 stocks are lower. That was the sort of long and short of it. Look at names like Gokuldas Exports. I mean, 8.5% there. Mayur Unicotas 5%. Just going down the list here. TRF, which is a material handling company, 12% there. So many names. Orient Cement, I think we highlighted earlier. There is Krishna Diagnostics, I think we highlighted. So, yeah, I mean, no dearth of single stock movers, especially if you go down the market cap curve coming through. So, We end with just about an 80-odd point cut. For the week, we are down 0.75%, which is 145 points in the red. That's Friday to Friday. It's a wrap on the session. Closing bell. Don't go anywhere. Our Friday special Smart Money comes up next in just a bit. Stay with us.